Hey everyone, in every industry there are hundreds of players, but there are only a few leaders. They are the ones who innovate, dominate market share and set the benchmark for others to follow. And in the journey, they create massive wealth for the shareholders. Now think about it. 20 years ago, who were the leaders in the category? In banks, HDFC was the leader. In IT, TCS and Infosys were the leaders. In energy, Reliance was the leader. In FMCG, HUL was the leader. Over the last 2 decades, these companies have not only survived every market cycle, they have thrived. They continuously expanded their market share, improved the profitability, and created massive wealth for the shareholders. In fact, if you look at long-term wealth creators in India, they are almost always sector leader. Because leaders enjoy strong brand, efficient operation, and access to capital that allows them to capture a larger piece of the sector's growth pie. Now, what if you get an opportunity to invest in all of these leaders across 20 plus sectors via a single index fund? Recently, HDFC has launched HDFC BSE India Sector Leader Index Fund that allows you to invest in sector leaders. So in this video, we'll discuss all important questions around this fund. We'll cover how BSE Sector Leader Index is built. Then we'll compare the performance of BSE India Sector Leader Index with BSE 500. Then we'll look at the valuation and diversification. And finally, we'll look at the details of HDFC BSE India Sector Leader Index Fund. Alright, let's get started. BSE India Sector Leaders Index starts with BSE 500 that already covers about 93% of India's listed market cap. From each sector within that, the top 3 companies are selected based on their 6 months average free float market cap. This means only the biggest and most dominant companies in every sector gets included. As of now, there are about 61 stocks representing more than 20 sectors of Indian economy. Each stock's weight is based on its market cap, but it is capped between 1% and 5% to ensure no single stock or sector dominates. This index is rebalanced quarterly, so it always stays up to date with market realities. Now, this slide gives a good comparison of BSE India sector leader exposure in each sector versus BSE 500. For instance, BSE India Sector Leader Index is overweight on telecom and construction sectors as compared to BSE 500 and underweight on financial services and healthcare. Interestingly, it is more diversified with fine balance across multiple sectors versus BSE 500 that is skewed towards financials with 30.4% exposure. This slide gives a good understanding of top 10 constituents of BSE India Sector Leader Index. It includes Airtel, Reliance, HDFC, ICICI, Infosys, L&T, ITC, SBI, Mahindra & Mahindra and TCS, all leaders in their segment. Together, they constitute 42.3% weightage. You can get the entire list of 61 companies from BSE India portal. Now let's see how this index has performed against BSE 500, that is the broader benchmark. So this slide gives a good idea on how BSE India Sector Leaders Index has outperformed BSE 500 index across time frame. In last 1 year, it has underperformed BSE 500, but otherwise outperformed BSE 500 across 3 year, 5 years, 7 year, 10 year, 15 year, and since inception. Now this slide shows year-on-year performance comparison. In the last 19 years, BSE India Sector Leaders Index has outperformed BSE 500 12 times. Overall, on rolling return basis also, BSE India Sector Leader Index has outperformed BSE 500 index across 1 year, 3 year, 5 year, and 10 year time frame. And even the risk-adjusted returns are better across time frame. That shows one clear pattern. Leaders don't just rise higher, they fall less. When market goes through correction, these large, well-managed companies tend to hold up better. And when the recovery starts, they lead the bounce. That's the power of owning leadership. Consistency, resilience, and compounding. Now let us look at the index valuation. Generally, market leaders command a premium valuation. So you might think that if this index holds all the big names, it must be expensive. Actually, no. Despite being filled with India's top companies, the valuation of BSE India Sector Leader Index are in line with the broader market. As of September 25, its P ratio is around 24.4, that is almost similar to BSE 500. Price to book is 4.4, which is again similar to BSE 500. Dividend yield is 1.17%. So you are getting leadership quality without paying a premium. In terms of diversification, around 83% of the portfolio is large cap, 10% is mid cap, and 7% is small cap. And since it picks 3 leaders from each sector, it's actually less sector concentrated than the BSE 500. That means a balanced portfolio is spread across financials, IT, energy, FMCG, auto, power, telecom, capital goods and more. Essentially broad exposure but only to the best names. Now let's talk about the actual fund that tracks this index. So HDFC BSE India Sector Leader Index Fund is an open-ended index fund that simply replicates BSE India Sector Leader Index. It's a passive strategy, which means it does not try to beat the market, it mirrors it. Here are the key details. Its benchmark is BSE India Sector Leader Index. Fund managers are Nandita Menezes and Arun Agrawal. NFO period is 7 November to 21st November. Minimum investment is 100 rupee. Exit load is nil. And allocation is between 95 to 100% in equity, up to 5% in cash or debt for liquidity. The fund is managed by HDFC AMC that has over 20 years of experience in index investing with 19 ETFs and 26 index funds already under management. So you're getting not just a good product but also a proven manager in passive funds. So that's the breakdown of HDFC BSE India Sector Leader Index Fund. Overall, if we conclude, the idea behind this fund is very simple. Own India's strongest companies across every major sector and stay invested for the long term. If India's economy continues to grow, it's these sector leaders that will capture the biggest chunk of that growth. This fund can make sense if you want exposure to India's top companies, prefer a simple passive low-cost strategy, and if you are invested for the long term, at least 5 years or more. It's not a high-risk, high-return thematic play. It's a quality-driven, diversified compounding strategy. I think it's a smart way to own the champions of India Inc. in one single portfolio. But as always, do your own due diligence, understand your risk appetite and invest with a clear long-term goal in mind. If you find this video useful, make sure you hit the like button, subscribe for more such insights and share this with your investing friend. I'll see you next video. Till then, take care.